Many of our listeners have not heard of self-directed IRAs. Can you expand on the definition of that? We can start off with that.
Yeah, so really what a self-directed IRA is it's an IRA that can invest in any asset allowed by law. So the legal restrictions on what an IRA can own are actually pretty small. It's collectible items, life insurance, and S corporation stock. That's it. I mean, everything else is fair game in a retirement account. What's happened though is most people have their IRA at like a broker dealer. Well, what does a broker dealer let your IRA or 401k buy? What they sell stocks, bonds, and mutual funds. That they've always sold that. And once retirement accounts came around, they just let your retirement account buy what they already sold. If you had an IRA at, let's say, a life insurance company, let's say you're at New York Life or Northwestern Mutual, what do they let your IRA buy? Annuities. That's what they sell. So IRAs have always been around and you can always self-direct it. It's just been that like you're typically at a broker dealer that's going to restrict you from buying real estate or a startup or crypto in your IRA. They're going to say, nah, you can't do that. And it's not because IRAs can't do that. It's because IRAs at their company can't do that.
So how does one get started? I mentioned rolling over old 401ks. What else? How else can we roll things over?
Yeah, I mean, that's a very common one is the old 401k. Let's say it's at Fidelity or wherever, and you've left that employer. You can roll that wherever you want. I mean, you could roll that to a broker dealer IRA. You could roll it to a self-directed IRA. And so if you had a traditional 401k, you just roll it to a traditional self-directed IRA. A company like ours, which is directed IRA, and there's like 30 companies out there that offer self-directed IRA accounts. You only need to know one, directed IRA, but you roll your account over to one of them, and now you have an option of, right, now I could invest in real estate. I could buy a rental. I could even flip a property. I could invest in a startup or a private company. It's not publicly traded. I could do pre-IPO. I mean, I could buy, we have a lot of clients buying crypto now. I mean, whatever you're into. So we're not in the business of telling clients what to buy, or we're just like, hey, whatever you're into, whatever you know and is your expertise, invest in what you know. We're just not going to restrict you to stocks, bonds, and mutual funds. So you got to move there. But also people, let's say you just have an IRA already. You've got a Roth IRA or a SEP IRA or a traditional IRA at another IRA company, and you're buying mutual funds or something like that. Well, you can move that or just a portion of that you want to self-direct and buy real estate or whatever asset you may be interested in. So you can always transfer with no tax or penalty to do that.
And what if you're currently working somewhere? Can an employer go to his boss and say, hey, I want to switch my 401k to a self-directed IRA? How does that work?
Yeah, that's the sticky one. Because if you're still employed, the company can restrict you from moving money out to any IRA or any other place. So it's like, well, our company uses Vanguard for the 401k. Like you're stuck at Vanguard. Now there's some exceptions to that. The first is if you're at retirement plan age. Even if you're still working there, if you've hit retirement plan age, which in some 401ks or 403bs is 55, most it's at least 59 and a half. So let's say you're 60 and you're like, yeah, I want to pull 200 grand out for my 401k. I've been here for years and I want to go buy a duplex. Okay, for just a rental. All right, you could do that. You'll be able to roll out because you've hit retirement plan age and they can't restrict you to leave all your funds in. But if you're 40, and you're still employed there, you're locked in until you leave or hit retirement plan age.
Great. Now you mentioned there are 30 companies out there. How does what kind of due diligence does one have to do when selecting companies, and what are some of the pitfalls that they should be watching out for?
I think there's there's probably three things to think about. So the first would be are they licensed? I mean, it seems pretty basic, and you would think if this company has a website and they take retirement accounts that they're licensed. They're not all. So in order to custody a retirement account like an IRA, you have to be a bank, a credit union, or a trust company. Or you can be specifically approved by the IRS, but there's very few of those left. They're basically like the large broker dealers. So you're pretty much looking at banks, credit unions, or trust companies. So we're a trust company at our company, Directed IRA and Directed Trust Company. We're licensed by the banking department. We're audited by third-party auditors. And so that's good because you want someone licensed and audited. there's a piece of the self-directed IRA industry called third-party administrators. And they never tell you what they are because they don't want you to know this, but they're not licensed. They have a trust company or bank in the back end that you don't work with, whose license they basically use to justify their ability to do it. But they have control of your funds. And so I'd be careful on that. There was a company that was a third-party administrator. The business owner stole a bunch of money and he's in prison now. And so that's because they weren't regulated. They didn't have an auditor in there every year. They didn't have a banking department examiner going through their stuff. There's no way that guy would have taken his customers' money if that was there.
Wow.
So licensed and audited seems simple, but that's one. I would get for recommendations, maybe people you may know. That's always the best way for any service. Try to see what the reviews are. We post all of our Google reviews on our site.
Wonderful.
And then the last would be is fees, right? I mean, just like any service, what are the fees? So there's some companies that charge a per asset fee where you have a per asset per year. So if you had 3 assets in your self-directed IRA, you'd have a fee per asset. There's some companies that charge a percent of your account. So let's say you have $1 million account, they'll charge you, 1% or they'll charge you 0.5%. There's a certain basis point on that. And then there's just a flat fee. We're the flat fee method of it's $295 a year, and then we charge a transaction fee when you buy or sell something that ranges from $50 to $100. So check the fees and just make sure you understand it for what you're trying to do.
Wonderful. Now, looking at going to real estate,
Yeah.
I always inform people, never purchase a real estate investment property in your own name. Form a business entity like an LLC, whatever you and your attorney and accountant agree upon that's best for you. How does that work with a self-directed IRA? Do they have to do a business formation or can they just do it under the IRA?
So if you're buying a property, real estate with your IRA, now remember, this has to be investment real estate. So this is like a rental or it's not something you're going to go live in. Okay, that's restricted. But let's say it's the rental. That's the easiest. I mean, that's what I own in my retirement account. You can buy it directly in the IRA's name. And like at us, it would be Directed Trust Company, FBO, Matt Sorensen IRA. That would, I just bought my IRA, that's who owns it. Matt Sorensen doesn't own it. His IRA does. But like you said, most people don't buy it in the IRA directly for the same reason they don't buy their investment properties in their personal name. They're going to set up an LLC. Even me, like I'm here in the office and I can push all the buttons to move the stuff around for my account. I don't even want to do that. I want an LLC. So I have my retirement account own an LLC 100%.
Okay.
I'm the manager of, and everyone can do the same thing. And then that LLC owns the property. So what the IRA owns is the LLC. Let's say you call it XYZ Investments LLC. The IRA actually owns 100% of XYZ Investments LLC, which has a bank account. And you'll tell your IRA custodian, hey, I want to send 150 grand from my IRA to this LLC. We can wire the money to the LLC. The LLC has its own bank account. You're the manager of the LLC, so you're in control. You don't own it at all, but you're the manager. And that allows you to go make offers on properties, go hire someone to fix it, manage the bank account to pay the bills and receive the income. And so it kind of puts you in a control position to get stuff done. Plus you have the liability protection of the LLC. So if something happens on the property, they can sue the LLC. They can't come after you. They can't come after the IRA.
Okay, great. And then are there limitations that an investor can't do as an investor under?
Yeah, there's some tax laws on that. So in the real estate space, the common one would be is you can't work on the property. So whether like my IRA owns it or I got an IRA LLC, like I can go to the property and I can boss people around, and the LLC, which is the IRA owns it 100% in this example, it's paying the bills, right? It's paying the contractor, but I can't go put on the tool belt and go do a remodel myself.
Okay.
And I can pay someone to do it, but I can't go do the work myself. So that'd be the first restriction. The second would be is that you and anyone disqualified to the IRA under the rules, which includes like you, your spouse, your kids, your parents, they can't have use or benefit of the property. So an example of that, we have lots of clients that buy short-term rentals with their retirement account. And let's say there's no one staying there for a week. You're like, oh, I just want to go stay there with my family. Nah, you can't do that because you're benefiting from the property yourself and you're restricted from that. It's got to be held solely for investment.
And what happens if someone dares to do that?
some, if you're crazy, you dare. What happens is you have what's called a prohibited transaction.
Okay.
And my book that you mentioned, the Self-Directed IRA Handbook, I've actually sold 35,000 copies now. I got to figure out where that bio came from, because I got to update that.
On your website.
It's probably the law firm website, because that's not as up to date. But yeah, so but what happens is the consequence of a prohibited transaction is you lose the entire IRA account.